The following is a presentation of TFNN, live at TFNN, the Money Masters. Now, the Money Masters.
Welcome to the Money Masters Show, folks. I'm your host, Steve Rhodes. Thanks so much for joining us. And as we take a look at these markets here right now, relatively flat market. The Dow is down 15 points, trading out at 13,939. Composite up a point here. S&P is down about 2 points, trading out at 1506. Small caps here. The big one, a big dog to the downside, trading out at 902, off 4.5 points right now. And as we begin this show, let's go take a look at the indexes. Again, if you are listening in on the radio or perhaps your mobile device at tfnn.mobi, if you'd like to see this show, like to see the actual charts out there, if you go to the homepage at tfnn.com, over on the right-hand side, you'll see those three buttons, those three little phones, those smartphone devices. Click on that, and this show will stream live to your device. You can always catch the archive of this show on Channel 10. And we're going to start off taking a look at the big dog, and that is the Dow. As we take a look at the Dow, you're taking a look at two beautiful patterns out here, two beautiful butterfly patterns, 1.272 butterfly. And if you're wondering what a butterfly is or why it's called a butterfly, I've got them colored in there. You know, it's seeing is believing, and it's really those wings that you are looking at there. And a butterfly, folks, it's an expansion pattern. And it is expansion of swing points. If you're not sure what a swing point is, if you take a look at a stock chart, it is where you see the most significant change in trend or change in polarity. And in the case of the Dow here, I'll go ahead and back this chart up a bit. You can see the nice run up that the Dow had from that November of 2011 time frame as we all came back from Thanksgiving out there, had a nice run up into the highs that were put in May, sell in May 2012 out there, and then you saw a retracement, a significant retracement. That top swing point where it made that little turn, kind of like a major intersection in life or a major intersection in the Dow, taking place on the actual day was on May 1st out there, out at the 13,338 level. So that becomes the first swing point. The next swing point, where you see a major intersection here, is back down to the June 4th level, June 4th, 2012. Market moves down into that area, and then, boom, moves back up. So that is when and there are swing points within swing points. Right now, when we're measuring butterflies, Gartley patterns, you're looking for the most major swing points out there. If you take a look at that May Day swing point high all the way down to June 4th, what you'll see is if you subtract the difference between those two and you go ahead and multiply that times 1.272 and add that number to the bottom of the June 4th low. By the way, the June 4th low out here in the Dow would be 12,035. Where that's going to take you to, the price point approximately of 13,653. And that was the swing point that came in September. In the Dow, the actual swing point high happened to be in the October 5th level, made just a little bit higher high out at 13,661. But this here qualified as a 1.272 butterfly. It's also what I've got labeled, if you're watching us on Tiger TV, it's what I've got labeled as drive number 2. The first drive was the high of May 1st. The second drive was at September 14th level. And that third drive perhaps coming in today or tomorrow out here. In fact, if you take a look at time, what's beautiful about this pattern out here is not only do we have expansions of swing points that are matching, meaning two 1.272 expansions, we've also got time correlation that is working out. I mean, perhaps to the day out here. And what I'm talking about is if you take the number of trading sessions between May 1st and the September 14th level, what you'll come up with is 94 trading sessions. Well, add 94 trading sessions to the high of September 14th. That's going to take you to January 31st out here. So we've got time, we've got price, all matching up with a 1.272 butterfly. The Dow today making a high so far of 13,966 out there. The high yesterday, 969. Yesterday also a TD 13, TD Combo 13 out there. Those usually have very significant, they always have very significant relevance in the marketplace. Can price go higher? Yeah, absolutely. I can't control price, but what we can do is we can watch what happens out here. So I'm going to switch over. So you've got a 3 drive to a top pattern. You've got a 1.272 butterfly that is completing, whether it was yesterday, today, tomorrow, perhaps it's Jobs Friday. Everything really falling into place here for a retracement to begin. Everything falling into place except for the one thing that is needed. That one thing is the signal from the bears out here. So I'm going to switch over. We're going to take a look at the Dow, and I'm going to show you something out here so that you can pay attention. Here's the 1.272 butterfly. That's the colored in area, but I'm going to go ahead and delete that. And what we're going to take a look at is if you come take a look at the swing point back here from May 1st, 2012, that's the first area that we covered. Took a couple days, but after a couple days, you got the bearish reversal signals. The bears can't hide. The bulls can't hide. In fact, the bulls aren't hiding right now. The bulls are out in full garb out here, even with the GDP numbers being out there. The market, in fact, I think it's the worst going back for several years out there, maybe back since 2008, 2009 timeframe. Market has kind of shrugged it off here at the moment. They've certainly shrugged it off today. As I say, a flat market out here. But what you can do is you can look for signatures. You don't necessarily have to jump in right at the highs if you're going to try to short something, or right at the lows. What you want to do is you want to really draft the bulls and bears out there. Now, the problem with this move here, and I will tell you the problem that's out there, is if you take a look at this move out here, it's been one heck of a short squeeze, and so you may have fewer and fewer bears out there. And so when you've got fewer bears, which are just simply natural buyers on a move down out there, that first move can be very, very swift. But either way, you're going to see a candle that's going to form out there that's going to tell you that the probability that the market correction is underway is, in fact, taking place. It happened out here in the May time frame. Took until, quite frankly, May 3rd out there before you got that signal. If we go back and we take a look at the trading sessions here of really, I'm using September 14th as the high inside the Dow. As I mentioned earlier, the actual high came in here on October the 5th. On this candle here on September 17th, it was a little bearish candle, but it got erased here after a couple days. You got you really got your signal right here on about September the 25th that the market was going to go ahead and start making a retracement. You can see the high of September 25th, quite frankly, was never taken out. That was at the 13,620. So you will see signals out there in the marketplace. Saw a little junior signal right back here on this leg up after January 2nd. Took place over a 2-day trading session, which was the January 7th and January 8th out there. And so now we've got everything in place, and now it's just a matter of sitting. If you're bullish, all you're going to do is you're going to wait for the bears to show up. And if they do show up, they're going to show themselves in a candlestick or a combination of candlesticks out there. And that's what you want to be paying attention to. The market here certainly stretched, so you're in a overbought condition as you're completing these patterns. If these patterns here fail and the bulls just say, hogwash, Steve-O, I don't really care what it is that you teach when it comes to Fibonacci retracement and so forth. Well, what's that next level up? Next level up from a Fibonacci number would be 14,397. Forget about 14,000. It would be 14,397. That would be your 1.618 expansion level. Do I expect that to take place? No. But what we would see here, what would really need to take place in order for that to occur, was to start to just see a sideways move. A sideways move will always work off a overbought condition. A sideways move will always work off an oversold condition. And that is always a possibility of what it is that you've got out there. As we take a look at, let's go take a look at the New York Stock Exchange. And the reason why we're going to take a look at the New York Stock Exchange is because, and then we'll go over to the Russell 2000. So let me switch over to the, actually it's going to be easier. Let's go take a look at the Russell 2000 here right now, because we know this has been a strong dog in the marketplace. And today, this is the weak link out here. And this has made an expansion. So let's go take a look at what that 1.272 expansion looks like. We're going to come off of September 14th. We're going to go, which is the high. We're going to go all the way down to that November 16th level. You can see it's up above the 1.272 area, just slightly. But if we take a look at today's candle, that is a bear sash candle out there. So you are seeing, a potential reversal. We haven't seen any real reversal signals on the Dow. You certainly haven't seen them coming off of the December 31st level. Yeah, you had these little kind of doji-ish candle out here. This really is a bearish harami candle. That's this candle right here, which is on January 3rd. If you'd like to learn about candlesticks, you'd like to learn how to be able to trade them, then you go to on the homepage of TFNN.com. If you go down to about the middle section, you'll see the Trader's Edge show. Click on that, and you'll see a online one-day candlestick. I'll get it out of my mouth. Don't worry. A candlestick workshop out there, and it'll teach you. I'll compress decades into hours for you. So check that out. Here we had a little, and this candle here, folks, nothing more than a pause button. Just like if you, we're going to hit the pause button on some movie that you were watching. In this case here, watching the movie of the small caps. Just hitting the pause button, not a reversal signal. Boom, moves up the next day, and so no real. You had a hanging man candle out here on January 10th, but that hanging man candle on January 10th, even though that's a bearish reversal signal out there, I don't really think so. And you had almost really two of them show up back to back out here. Today, really where you're seeing your first bearish signal out here, and so it could be the Russell 2000 that it led the charge on the way up. Maybe it's going to be the Russell 2000 that leads the charge on the way down. Well, we do know the Russell being in the overbought condition, so it has to work its way up, but maybe giving us the candle signals. Now, we're going to go over to the New York Stock Exchange. Why? Because if you were listening on yesterday's show, the prior session had given us a key reversal day. That key reversal day taken out like sliced butter, Kerrygold butter. As a matter of fact, if you were making your Tiger butter brew out there. Now, what you can see here on the New York Stock Exchange, also a beautiful set of butterflies out here. Those butterflies, one completing yesterday. You've got another one up a little bit higher, maybe at about the 59 to 77 level. So we're right inside that range. Now I'm going to go ahead and remove these from the screen here so we can go take a look at today's session. Take a look at the candle. Go take a look at that key reversal day out here. That key reversal day with a bearish engulfing took place here on January 28th. Key reversal day, folks, for you that aren't familiar with those, that is where you have three things take place. Number one, you need an extended condition. Well, we certainly have that extended condition, just being not only just being overbought, but the butterfly pattern itself. You also intraday need to intraday trade above and below the prior trading session, the prior candle. That most certainly happened. And you need to close in the opposite direction, and that is, in fact, what happened. Yesterday, though, taken out altogether. Today's candle, again, nothing more than a pause button on the New York Stock Exchange, trading out at 89.24, but we also want to be paying attention to this for reversal signals. The Russell 2000, the New York Stock Exchange. Why? Because those two have been big winners out there. 877-927-6648. Hey, don't forget about our great Panther Silver giveaway. Go to the homepage at TFNN.com and sign up for it. We're going to be giving away some silver in just a few minutes. Dow is down 17. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. The Dow off 22 right now. Composite down 3. S&P's off 3 as well. Russell continuing to take it in the shorts, off 6 points right now. And earnings central, absolutely. After the bell tonight, you've got Tractor Supply. TSCO is their ticker symbol. Las Vegas Sands will be out with earnings. JDSU. Before the close tomorrow is going to be a big day. Hershey's Chocolate will be out with earnings. MasterCard, Occidental Petroleum. Not that Hershey's chocolate moves much, but I like Hershey's chocolate. Who doesn't like chocolate out there? You've got AutoNation will be out. The Energizer Bunny ENR, that'll be out as well. You've got Sherwin-Williams, SH Double, Under Armour. They will be out with earnings as well. Of course, Amazon was out with earnings last night and, gapped up this morning, not trading at its session lows, but has been selling off for the most part ever since the open, trading out at 270.30. Couple of bearish-looking candles, and you had some volume to the downside yesterday. So the sellers absolutely inside Amazon here. If Amazon continues its move down, it's got, what it did test here, and let's see, it broke it. What it did was it tested, of course, the January gap up inside Amazon. That was coming off of January 4th out there, but coming down with such volume. Yesterday, the volume on the way down was 10 million shares. What Amazon should do is pull back and test the last bullish candle out there, the December 31st level That would be at the 240, 275, 3.5 million shares. But you're seeing a couple of days here with volume really to the downside, and that is inside Amazon. One of the indexes here, let's go take a look at the SOX. And as we take a look at the SOX, let's go take a look at what it is doing. We're going up against a resistance level. Horizontal resistance, really a set of swing points out here that would take you back into the May 1st, 2012. That's up at the 418 high. Now, what the SOX did yesterday, in essence, was completed a 1-to-1 A to B equals CD, but of course that retracement there says it could do more. Did a little doji candle, and then yesterday what it did was it completed an evening star. So you've got some resistance here, both from the horizontal resistance, taking you back into that May 2012 time frame, a 1-to-1 A to B equals CD, and now bearish formation. That says resistance, strong resistance right up at the highs of May 1st. If you close above it, if not you, but if the SOX closes above it, you would see a pretty strong continuation move. Let's go to Cambridge, Massachusetts, to Kathy. Kathy, thanks for calling. Thanks for holding. How are you today?
Thank you. Good, thank you. How are you doing?
Absolutely great.
Hello?
Thanks for asking.
Great. I'm just looking at the first one to turn here. Looks to me like it may be the transports. Since they were
All
the
right,
first
let's go take a look at it.
Off.
So we're taking a look at the IYT. So just like the Russell, that is struggling here today. And the transports here, right now I would say, Kathy, if you get a close below the January 24th session, that would be, I'd say, between a close today below the 102.68, that would be your bearish candle signals. The last 3 days out here on IYT, set of hanging man candles out here, all with closes up towards the top there. But if you do get it closed today, it had pretty nice volume on January 24th, 1.7 million shares. But you'd get your bearish candle signal today with a close below the 102.68. Are you actually in this trade here trying to short this, or what are you doing?
No, I was waiting on an entry point. So I just saw that high bar today, was it last week, I think Wednesday or Thursday, and then it just kind of flattened out on lighter volume the last few, and today it just looks like it's picking up more to the downside, the volume.
Yeah, no. And you're right, because you got an hour of trading, folks, and you got 480,000 shares. So if volume were to continue like this, it should be able to take out the volume off of the volume off of that January 24th candle. And Kathy, you're exactly right. I mean, that would be a huge signal, because if you did have volume to the downside today in the transports, what we would have is volume off the highs.
Right, and FedEx,
which would be
the highest.
Yeah, which.
I mean, is the largest rating, I'm pretty sure. And that seems to be coming off the top with some volume. It's already almost 500,000 shares in the first hour. So.
Yeah, and so now if we take a look at FedEx out here, what FedEx also did this morning was it gapped down. So you've got your bearish, signal there, most certainly, and you're right, 484 million shares going against 2.7. So, hey, Kathy, thanks so much for bringing that to our attention.
All right, great. Thanks, Steve.
Okay, have a great day. We'll get back, folks. We're going to go to John in Philadelphia, take a look at the S&P 500. Dow's off 23.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back to the Money Masters Show, folks. Dow off 23 points, and, I want to say just thank you to each of you out there. There's a phrase to live by: if you're not giving, you're not living. And, our last caller, Kathy, it was great for her to call in and just to give us a little warning signal there about the IYT, how it was trading, and all of our tigers and tigresses, truly live by that philosophy in life. And certainly our next caller, John from Philly. Folks, if you haven't had a chance to check out the Tiger's Den, do yourself a favor. Go check that out. You can do it for 30 days. You can give that a try. John is in there. He is one of the more giving individuals with regard to giving out trade ideas, trades that he actually puts on out there. And so go check out the Tiger's Den, and he lives by that. He lives by that philosophy. If you're not giving, you're not living. John, thanks for calling. How are you today?
Steve, fabulous segue. You were reading my mind.
Oh, good. Now, I saw you posted a chart here during the break of the Wilshire. I know you wanted to talk about the S&P 500, but you posted a chart on the Wilshire 500, the Wilshire index out there, not the what is it? Is it the Wilshire's 5,000 stocks?
Yes. In fact, Steve, yes, I did want to touch base with you on the broad U.S. stock indices. And I did want to share an interesting feature regarding the Wilshire 5000. Before I share that feature, however, let me just share an idea with you.
Sure.
Many years ago, I had continual questions about which indices to analyze to get the best representation of the U.S. stock market. You know, you could use the Dow, you could use the S&P, the NYSE, the NASDAQ composite, and I tell you, I stumbled on a concept many years ago that has served me well since. And the first thing I've thought is I look at the NASDAQ comp and the NYSE composites separately, and it's the thing you want to remember, at least I remind myself, is that those two indices have no overlapping stocks whatsoever. So one can kind of think of the U.S. stock market as being a combination of the NYSE and the NASDAQ just bunched together. I then thought about using the S&P 500, but thought that has some minor drawbacks on account of the fact that it's an index whose components change over time as dictated by decisions made by a committee sitting inside of Standard & Poor's. I came across, after thinking those things, the Wilshire 5000. And this particular index, Steve, is just 5,000 of the U.S.-listed largest stocks, fully cap-weighted. And so that is the best representation of the U.S. stock market that I've ever found. So without belaboring all those details, the reason I just bring it up, those are good details, John. And so, is there an ETF for our listeners out there that don't have access to that? Is there an ETF at all that you found that actually tracks the Wilshire? There is not. That's the interesting thing. None whatsoever. That's a problem. But having given you that answer, Steve, the interesting feature that is very pivotal right here, right now, which is what I wanted to share with you, is this idea. The Wilshire 5000 peaked, of course, with the S&P the very same day in 2007 in October. And the Wilshire's high was 15,939. The high today in the Wilshire 5000 was 15,927, virtually right there. And I'm looking at this for clues. Will in fact the Wilshire peak right against that prior swing high, indicating some sort of trouble, or alternatively will extend over and we're right at the level within less than 0.1%. Well, we'll start getting that additional information. So it's real timely. It's right here. It's right now. So I wanted to bring that to your attention.
And that's great, and I'm glad that you did. And I was earlier this morning, happened to get up kind of super early, and which was why in my newsletter I was confused. I thought today was Thursday for some reason, but even though I knew I was doing my Wednesday workshop. But I was taking a look at the Wilshire this morning, because one of the things that I was doing, John, was taking a look at the new highs, new lows of each of the indexes out there. And the Wilshire was one of them. Full, as you said, fully capped. And what was interesting about the Wilshire 5000 is when I took a look at new highs, it's actually been pretty stable for the last 4 or 5 trading sessions. Whereas that wasn't the case when I took a look at the S&P 500, or the New York Stock Exchange. Both of those were showing decreasing highs that were being made, yet the broad market was in fairly substantial decline after the big push-up from 4 trading sessions ago. So what I don't have, and I'll have to find the actual symbol that I can use to actually pull up the Wilshire, and I'll do that, and I'll review that during the Money Masters show. So your take on it is what? At this stage?
My take is this: it is the high today being as close, virtually identical to the high of 2007, is too close to ignore. Namely, if the market, if the Wilshire Wilshire and the S&P back away from these highs right here, you have to respect the possibility of a double top versus 2007. If on the other hand, within the next couple of weeks, the Wilshire extends above that 2000 high, which is in effect today's high, that is a signal suggesting virtually no upside resistance. So I make no prejudgment, letting the market tell me, but this is a particular index where we can get some very interesting information, and hence I wanted to share that with you.
No, that's great. And like I said, I was looking at it myself this morning. I've got a couple different systems that I use. So the divergence that I saw inside the Wilshire was that, I saw with regard to making new highs, it was relatively flatline and stable, wasn't decreasing. But when I took and John and I share a couple of emails back and forth we did yesterday to look at some different charts out there, and you had a really unique chart. But that being said, when I took the divergence that I saw inside the Wilshire was inside taking a look at the McClellan oscillator out there for the total market, and what it's doing, it's actually making lower highs. So as the Wilshire has been making higher highs out there, the market moving up, the oscillator is actually turning down and it's making lower highs out there. So, we'll see we'll see how it plays out. But it is, and I'm glad that you pointed out, because it's another place for us to be able to get some good signals on the marketplace out there.
Indeed.
So thanks so much for. Go ahead.
Yes, and Steve, thanks for your work. We do appreciate it, sir.
No problem. And we appreciate everything that you do for all the tigers and tigresses in the den and when you do call in. So thanks for calling, John, and have a great day.
Excellent, Steve.
And, folks, it is that time when we have another Great Panther Silver giveaway winner. And I hope we're going to go out to Phoenix, Arizona, not too far down.
Oh.
And Pesavito, we're going to go to Milagros, I hope, from Phoenix, Arizona. Did I get that right?
Yes. Yes.
I did?
Yeah. Milagros.
Oh, how about that? Well, congratulations on being a winner and getting some silver. Thanks so much for entering our contest. How long have you been a listener at TFNN?
Maybe 2 years.
Oh, that's great. How'd you come upon us?
It's in the TV. I heard it in the internet.
Oh, you did? Well, hey, look, that's great. We're always interested in trying to understand how folks get in contact with us, and we appreciate all of the listeners. We appreciate you just telling a couple people every week about us. That's how we expand.
Yeah.
And is there anything that you trade? Anything you'd like us to take a look at while you're on the line?
No, not this time.
Not this time. Okay. Well. Thanks so much for participating, and congratulations on winning that silver, and we'll look forward to hearing from you again.
Okay, thank you so much, too. Bye-bye.
You bet. You have a great day.
You too. Bye-bye.
Okay. And, folks, do yourself a favor. Go over to the homepage of TFNN.com. It is easy to enter. It is easy to win. We've got silver that we're going to continue to give away. Basil's going to give away a piece, in probably about an hour. And then we'll have Larry. It is Wednesdays out here. So on Wednesdays, our lineup includes Larry Pesavento from 12 to 1. Then we've got from 1 to 2. Oh, Larry is from, Larry. Oh, boy, I got to maybe get my time straight. What... Okay, so what we have here, following this show, we've got Basil, then we go to Larry, he is 12 to 1, then we got Daryl Martin 1 to 2, David White 2 to 3, I know I could get this, Ken Shreve from 3 to 4, and the Tom O'Brien Show from 4 to 6 out there. As we come back to the markets here, pretty flat as far as the Dow, still down 24 points right now, the composite off 8. And if we take a look at some things here that are popping and dropping off to the lead here in first place, the downside right now, you've got Priceline off $5 and change. MasterCard also struggling a bit. Let's go take a look at MasterCard because that has been one of the strong stocks out there. And as we take a look at MasterCard, the ticker symbol MA, as we pull that up on the screen. And because for MasterCard from strength, we can get a pretty good indication of what is going on. So MasterCard Trading out right now at 514. And it looks like what MasterCard is trying to do, the most recent swing point on it really would be the January 18th level where there was 1 million shares. And so far in trading today, 321,000 shares. So it has some pretty decent volume in it. What MasterCard wants to at least do is come down and test the gap up area from January 2nd. That's really where you're going to get your first piece of information on MasterCard. That's going to be at the price point of about 501, and that's got 1.2 million shares before you get a real release of information. It does have really, for the most part, off of the highs here, and I'm referring to the high from January 10th. If you stitch all those candles together, it looks pretty bearish. We haven't seen MasterCard have that look really since the last retracement of any major significance, which was back in October 17th, 2012. So starting to look a little bit like that. Now, MasterCard has not really made any very large retracements out here. In fact, I've got a little tool I think I could put on the screen, and we'll probably see that what MasterCard does is pretty much equal retracements. That's this little yellow box out here. So that is one retracement. Let's see if I can move that over. Look at, and it's a little bit less than that on the retracement off that October level. But you can see, there's relative harmony within a range out here. And so if we go back and we take a look, and I go ahead and move this box up to this possible retracement out here, what you're going to see, it says MasterCard, what it wants to really do is come back and test the January 2nd level. So that would be normal. It's kind of a natural harmonic with inside MasterCard, and you want to look for those types of patterns on anything that you trade. And the reason is, there is not necessarily any reason to jump out of this equity. What you should expect is I bet you if we it reached its overbought condition, right now it's just working that up. It's got a series of bearish candles, but you would expect that on a pullback. No real great volume out of the equity here, and for it to pull back and test the December 31st gap up area, that would be normal, and it's really within the range of just simply the natural, normal harmonic of the last couple of retracements that it has done. Now, if it starts to expand to the downside, that's a whole different scenario. If you start to see volume coming out of it, that becomes a whole different scenario out there. So that is on MasterCard. If we go take a look at, let's go see what else do we have that is popping. What is this equity here? Manhattan Association. Let me just see what it is that they've got going on out here. Looks like just earnings. So I don't recall having looked at this stock chart. Their ticker symbol, so you can follow along at home, is MANH. And as we take a look at this, I was just type in properly. Give me a second here to refresh my screen. So as we take a look at Manhattan, it's trading up 12% up at 71.94 right now, gapping up with volume. So let's go take a look at this equity. Let me see if I can find out what these guys actually do here. Manhattan Associates develops, sells, deploys, services, and maintains supply chain software solutions for planning and execution of supply chain activity out there. So as we take a look at this equity, boy, this is having a nice run out here. Everybody in this equity is at the is in the money. Everybody, you got to love that. 877-927-6648. We come back. We're going to go take a look at Manhattan Associates. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
Catch Basil Chapman as he uses his Chapman Wave methodology to call the markets. The Tiger Technicians Hour, next on TFNN.
Welcome back, folks. The Dow down 18 points right now. The S&P's off 3, and we were taking a look at Manhattan Associates before we went to break there. The ticker symbol there is MANH, and gapping up this morning with volume, certainly in the extreme bought territory. Now, what's interesting about this stock, it does have some gaps out here that have not been tested or filled. In fact, the most recent one is the previous gap out here, gapped up with a volume of about 196,000 shares here today, though, gapping up so far with 371,000 shares. Stock chart looks pretty healthy. In fact, on the monthly chart, looks like it wants to run higher. Might want to put this one on your charts here. It's going to have to work off this overbought condition. It always has in the past. It will in the future as well. And maybe take a look at it as it comes back to the gap, whether it fills it and comes all the way back to the breakout of yesterday, which would be the 64.05 level, or just simply comes down and tests the 67 low. That is the low of today. That is MANH, Manhattan Associates, breaking out today. Let's go take a look here at the ETFs just as we come into the closing segment. So let's go take a look at the Qs and the SPYs and the diamonds out here. So we take a look at the SPYs, completed a 1-to-1 A to B equals CD. No bearish candle out here just yet. And what would be required today in order to be a bearish candle? Well, if it closed below the 149.77 mark. That would be a pretty good indication there. Otherwise, today it's just hitting the pause button. And what we do know about the SPYs here, even though it's completed the 1 to 1 A to B equals CD, just slightly above at the 151.76 mark would complete a 1.272 butterfly pattern. So maybe that is the area that it wants to target. Maybe Uncle Ben, when he releases the minutes here at 2 o'clock, maybe we see some kind of spike, blow off high out there. Time will tell, though, and let's see, between 2 and 2:30, that's when Daryl Martin will be on, so make sure that you're tuned in during that show. Should be a little bit of volatility, really not much in the marketplace here just yet. So that's on the SPYs. That's what you would need in order to have your really first bearish reversal signal of any real meaning take place, certainly off of the December lows out there. Let's go take a look at the diamonds, see what the diamonds are doing out here. The diamonds also today, so far the candle out there is a pause candle. However, you get a close below yesterday's open, which was at 138.44. That would be your reversal signal. You can see that the diamonds really, in order to get to 1.272 butterfly, in essence, really having completed it. 139.76 would be the actual number. So far, today's high is 139.76. So far, today's high 139.37, and yesterday 139.38 out there. Let's go take a look at the IWM. So there is the weak link, and the IWM right now giving you a reversal signal out here. Volume, now what you'd want to see is volume pick up to the downside. Volume today in the IWM, 11 million shares out there, and that's really going against, let's see where we have the last candle of any significant, January 24th, 40 million shares. So we've done 11 million shares in an hour and a half out there. That is on the IWM. So the last one would be the Qs, and let's go see what the Qs are doing here. The Qs really, the Qs here have been traveling in the sideways range, dealing with the gap down, not the gap down, the downdraft day from October 19th, that high, 67.27. And if you were an intraday trader, you would be selling the Qs at about this level, and what you would be looking to get out of it over the course of a day is another test of the gap up from January 2nd, down at 66.48. Stay tuned for Basil Chapman, folks. Thanks so much for being here. Have a great Wednesday. I'll look forward to seeing you in the morning. Take care, folks.